All right, good morning, everybody. Dead cat bounce, redo. All right, so quite a bit of names are up in the pre-market, again, as usual. Seems like just Pete and repeat. Want to start everything off by going over to the Market Watch tab. Bring in the calendar. If your calendar looks like this and you feel that it's a little overwhelming, maybe there's just too much stuff, click the show all. That turns everything off, and then just turn on your Econo Day event. And that way you're not so overwhelmed by all the things that are on there. These are the ones that are going to be most impactful on the day. As I've said before, don't trust Thinkorswim to give you a fair glimpse of everything that's out there. You may want to check places like FX Street. Even the Discord has a bot where you can run a command and bring up the economic events for the day. 7:30, 8:30, 10:30, 11, 11:30. It is important to recognize that we have additional auctions today. This means we can see a market change drastically from a range-bound market to a trending market, or vice versa. We've seen that on Monday with really clear example, absolutely amazing example. So we were up quite a bit this morning. It's starting to come back off again. A little bit of that failed flag setting up, only now it's not failing. It's beginning to actually follow through. Looking to retest the lows. If that low fails, we'll have to go a little farther than that. You can see we're below this major pivot. That was a critical level yesterday. $4,500 is the target to the downside right now. And should we break 4,500, then we'll be looking at the weekly expected move, 44.50. Pretty close to that. 44.43. So that's our downside targets. It wouldn't be considered extreme for us to go down to the bottom here and hit that weekly expected move. So if you're looking at this and you're thinking, oh my goodness, SPY falling all the way down there. Well, it was projected to be able to reach that distance last Friday. So, seeing the market actually make that move, that doesn't really bring on connotations of a market crashing and burning and everything negative. So that is the target to the downside if we break this low. For the upside, we're looking to reclaim the Globex high. that's very close to Tuesday's low. Those combined are going to be one heck of a struggle to get through. Um, it would take a significant amount of pressure to make it through that level. As a pivot point, just point this out. There are no more trapped traders here, so keep that in mind. Continue to move through the upside, we would be targeting 4,600. Looking at a 1.8% from the highest point at Globex. And, the ES has an ATR right now of 1.23%. So it could make that without even shrugging. So that orange line is my 50-period moving average. And that would be the target or the line in the sand. All right, classic H pattern here on Nasdaq with a lower double bottom. Not much lower, almost not at all. All right. Now, IBD suggests that double bottoms and double tops should exceed the previous pivot point because it is designed to shake out weak hands. And when it doesn't do that, then it's not the institutions that are driving this ship. And that kind of has its own forecast attached to it. So this is likely to stall and not make it back above 16 since it perfectly bounced on this low. But the pattern itself, the H pattern, I've heard it nicknamed hell for shorts. This is a bullish pattern. So we'll be looking for that bullish pattern to unfold and prove itself. Of course, news can change all of that, just like yesterday. We had a good, clean, bullish market. News took all of that. We have an ATR of 1.67%, so the Nasdaq can easily make a 2% move, even from its current location, down or up. We are already below this last critical pivot. $15,600 is the next target to the downside. 225 points from our current location to the downside. And if you're thinking that is just a little extreme, on the weekly expected move, 15,600 lines up with that 50-period daily moving average, and those are confluence. That is our target to the downside. It's not too extreme after all. An upside move would put us challenging against the top of Globex. It would also be challenging this pivot point back yonder. If we happen to make it through that, 16,050 would be our upside target. It would be a struggle to get beyond that, but if we did, then the 200, which is that purple line, would be the deflecting line in the sand. We wouldn't make it through that today. All right, so you can see that it's picking up a little bit of steam across all of the indexes. What's doing it? I think you guys have heard it enough now. What drives our market? The dollar, the bonds. When I was newer, it really just used to bother me that I would go looking for news and try to figure out, man, what just happened? Why did our market move? And I couldn't find any news. There would be nothing out there that said this happened and now suddenly look, the market's falling. So I went on the hunt trying to figure out what in the hell is moving our market. It's not news. What's going on? It's money. Money, money, money. Sometimes it is the dollar, sometimes it is the bonds. But if it's not news and you start looking around, you're going to find what you're looking for. You're going to find your answer. Now, notice right now that the dollar and the VIX are not looking the same. The dollar is still not representing global risk around the world. So keep that in mind. You're going to want to keep your eye on these through the day. Since we're already talking about the VIX, to show you how to get a really good look at the VIX. So most of your VIX products out there refer back to the VIX futures in some way, shape, or form. And unless you're a nerd like me and you've went and looked, you probably don't even know what your VIX product is looking at. But more than likely, it's looking at the VIX futures. So keeping that in mind, if we were to go to product depth up here and turn it on to VIX futures, you can actually adjust how many curves you're looking at. What's a curve? How many months? See, futures are a lot like options in the fact that they're dated and they expire. What we would normally want to see is a futures market in contango. And for a long period of time, the contango this year has been very, very, very steep. It's been very sharp and extreme to the upside, which caused a lot of consternation and a lot of uh, head scratching and confusion and worry because of how steep it was. Steep, like that steep, right? I mean, it was extremely steep, and it's still contango. Right now, what's contango? It means that things farther out in time. You can see August over here on my right, January here on my left. January should be lower than August of next year, and that this curve should gently, maybe at a 45-degree angle, extend across the screen. And as we go farther out in time, things should become more expensive because there are a lot more unknowns in the future. When that goes inverted, when things farther out in time are cheaper than things that are right now in our face, this is called backwardation. You often hear that word associated with things like the yield curve and other dated price products, which is exactly what we're talking about here. When things in the front, especially the VIX, are more expensive than things in the back, we're in backwardation. And what this is saying, if we translate this into plain English, people are more scared about their immediate market environment than they are about where we will be in May or June or July or August. They are very concerned about their immediate market environment, and they are willing to spend money to protect themselves now. We are very clearly in backwardation today. Now, you can put it on your calendar. We were not yesterday. Yesterday, we seen the slope of that contango dropped to almost flat. And now in the overnight hours, that March series finally did the trick. But it wasn't just March alone, it was these three combined. Now, generally, now that you know where to find this, generally I like to turn on the curve button and knock the series down to something more reasonable, right? Like the next 4 months, maybe even 3 months. Now, when we do this, we're still in contango. If you see January and or February go higher than March at this point, that will be a very extreme backwardation. So now you know how to use your thinkorswim just a little bit better. S&P 500 pre-market change percent. Click on the little grid here just so it changes the way everything is structured in these boxes. Filter down to around 100 names. Change the color scheme so it kind of pops at those lower values like 13. Green on the screen, dead cat bounce in play. These pops to the upside are nothing more than opportunities to reset and sell another position. Instead of buy the dip, it is sell the rip. If you haven't heard that phrase, cheers. I didn't invent that one either. I stole that from somebody else. I would give them credit, but I don't know who said it. I don't know where I picked that up. It's just I didn't make it. Nasdaq 100 pre-market change percent. Click the box to make it pretty. No filter needed. Change the color scheme. Green on the screen. Again, dead cat bounce. Sell the rip. When we get into the stock screener, we start asking the question, well, how many names are up this morning in the pre-market? 1%. In the S&P, we have 10 names. It doesn't really inspire a lot of love, but I do see financials and energy. We have talked about more than once that financials and energy are tightly correlated. At least this year they are. It makes sense that they're both moving in that direction. Also, keep in mind when the bonds are moving, it often greatly associates with finance, right? When the bonds go up, interest rates go down. Banks really hate low interest rates. Technology loves it. When the bonds fall and interest rates go up, banks really like that. Technology doesn't. The Nasdaq 100 does not have financial names, and the S&P does. So we're seeing those financial names here. Tie it in with energy. And if we look at the list of names that have weekly options, pre-market change, extended hours, see a lot of IPO names in there. Energy, steel, airlines, EV markets. It's almost across the board. The MOC yesterday was not very large, surprisingly enough, on either side. For the NASDAQ, how many names are up in the NASDAQ? At least 1%. 8. Not very impressive. I think we want to flip it around and go the other direction. How many are down 1%? 8. For the S&P, 4. So we're more flat and sideways than we are aggressively positive or negative. So we got a list of names here, 23 names. This is how many companies are up at least 0.5% in the NASDAQ. So we're really not going to want to lean on the sectors today. We're going to want to be stock pickers, play the charts that you see. There is no reason to believe that this weakness in the market is done yet. There's a lot to be priced into the market, and there's no expectation that they are done with their capital rotation. So rather than leaning on the sectors, run your screeners and lean on the trades that you have right in front of you. You're going to want to just use the sectors as a guide through the day. Where are we at? Where's our structure? Where's our strength? You can see most of the sectors are up this morning, but I consider them weak if they're not up at least 0.5%. We've already had a significant rebound in most of the names, like the airlines, for an example. Chip sector, really negative. Something to keep in mind. Uh, with Apple's news, there are a lot of companies out there specifically designed to be to facilitate or to assist Apple in making its phones. So if Apple comes out with bad news about their supply chain or their products being ordered, or the exuberance of customers and sales numbers, it's going to have a ripple effect across the board. Not only is Apple a mega cap, not only is it one of the FANG names, those ancillary companies are also going to cause a ripple effect through the market. And Apple did have news yesterday, and that is affecting its supply chain, and those other companies that are strictly designed, just were literally created to be an assistant to Apple in its production of its iPhone. Oh, my crypto list didn't load. It's broken. When in doubt, reset. For some reason, this one keeps running a scanner. Fine. We'll just use the other one. Fine, fine, fine. All right, so crypto's kind of a little iffy. My crypto list is not crypto names. They are companies that are associated with blockchain and or own a lot of crypto. Mixed bag in here this morning. You see it's almost 50-50. The ones that are up are really up, and the ones that are down are really down. EV markets also mixed. My EV list, I pulled out all of the EV associated companies, batteries, technology for self-driving, all of that kind of stuff. I pulled those out. This is more of who makes an electric vehicle list. And pot stocks, mixed bag. Now, I talk about the smalls exchange from time to time. And usually when I say that, when I'm talking futures and I mention the smalls exchange, people who don't really trade futures seem to think that I'm talking about the minis and the micros. But I'm not. I'm talking about these new products that are futures, but they trade very, very similar to how an option trades. And yet they're futures. Futures Smalls Exchange. Guys, these things have no PDT. It means you can trade them all you want, and there's no PDT associated with it. It literally is a futures product, but it closes at the end of the day, so there's no extreme margin into the close, and they expire every month. The list of products in here is diverse with these Smalls Exchange products, and you can trade these in your 401k because Tastyworks, right? So you've got Sticks, which is like small technology. It would be, consider it like a new Nasdaq. Then we have SPRE. This is going to be your precious metals, not trying to trade just gold or just silver or just platinum, precious metals in general, all summed up into one contract. SMO, oil. If you was trying to trade the real oil futures, oh my gosh, it's extreme, it's violent. The tick size is really big. It's scary. It's a big, scary product to trade. This is much, much, much smaller. SM75, think of this as a new S&P. Only instead of having 100 companies, it has 75 companies. And it's a little diverse, not the same kind of S&P 100 that you would normally trade, but very, very, very similar. The dollar. How many times do I talk about the dollar every day? Every day. You want to get exposure to the dollar and the dollar futures? Boom, boom, boom. Let me trade this. Crypto futures. You don't have to be a millionaire to go in and trade crypto futures. You can trade crypto futures right here. All of them, not one of them. Pot stocks. Why try to pick one pot company when you can trade futures on pot? And then the 30-year bond, the 10-year bond, and the 2-year bond. Come on, guys. You talking about a different product to trade? These are awesome. I love these things. I trade these things all the time. Trade's not really the right word, though. They are new, and they're not super liquid, right? So day trading them, while you can do it with no PDT, the lack of real liquidity means that the bid-ask spread is a little rough. But the margin reduction per contract, it does change per product. It's not very much. I think the margin on the 2-year was $150 margin buying power reduction. So they basically said, do you have more than 150 in your account after you buy this? And if the answer is yes, then they say, okay, you can buy this. They're just checking for your margin requirement. If you want to learn more about them, just type in Smalls Exchange. And you can read all about them. Now, these are one side of a new world out there, and they're made by Tasty Trades. There are another new group of products out there made by Bloomberg called FairX. They are exactly like what we were just looking at, leveraged, day tradable, condensed to offer you a wide variety of products to trade. What I usually say, exposure to the market. No PDT, guys. No PDT. Small account friendly. Lots of diversity in the things that you can trade. These are actually more liquid, so they're almost day tradable in their bid ask, in their their softness. You can trade FairX on your Tradeovate account, and you can trade the smalls on your Tastyworks account. You used to be able to trade the smalls on Tradeovate, but it apparently there was a conflict between which small group they wanted, and they chose Bloomberg's and removed Tasty's. Doesn't matter. Just something else to trade, right? Or to invest in, because maybe trading isn't the word you're looking for. Have a good day, everybody. Enjoy your week. I'll see you all tomorrow.